On June 2, 2026, Nvidia's own CEO, Jensen Huang, did something almost unheard of. He publicly asked one of his suppliers to make more chips. That supplier was SK Hynix, the company that invented high-bandwidth memory back in 2013 and still ships more of it than anyone else on Earth. 5 weeks later, SK Hynix listed on the Nasdaq, raising $26.5 billion, the biggest stock sale by a non-U.S. company in Wall Street history, bigger than Alibaba's. This is what SK Hynix actually makes, why the world's most powerful AI chips are useless without it, and why, even after that listing, its forward earnings multiple is the cheapest of any major memory maker. On July 29, 2026, SK Hynix reported second quarter revenue of 79.3 trillion won, about $55.2 billion, up 51% from the prior quarter and 257% from a year earlier. Operating profit came in at 60.5 trillion won, a 76% operating margin. First half revenue crossed 100 trillion won for the first time in company history. And yet, the results still missed some analysts' even higher expectations, and the stock fell nearly 10% the next day. When record-breaking numbers aren't enough, that tells you something about how high expectations have already climbed. SK Hynix is a South Korean semiconductor company, headquartered in Ikyeon, trading in Seoul, and, since July, on the Nasdaq as SKHY. It has a market cap of roughly $824 billion, on first-half revenue alone of over 100 trillion won, call it $70 billion, and a quarterly operating margin of 76%. Here's the number that matters most. Its forward price-to-earnings ratio sits under 6, even cheaper than Micron's or SanDisk's, the two other memory makers riding the same boom. A company that just posted one of the most profitable quarters any chipmaker has ever reported, priced like it's about to slow down. SK Hynix makes memory, the chips that hold and feed data to a processor, across 3 product lines. High-bandwidth memory, or HBM, stacked DRAM built to sit beside an AI accelerator, a category SK Hynix itself invented in 2013 and has led through every generation since. Standard DRAM, the memory in every phone, PC, and server on Earth. And NAND and enterprise SSDs, sold through Solidigm, its US-based storage subsidiary built from Intel's old NAND business. The newest chapter, HBM4, now in mass production, with SK Hynix holding somewhere around 60 to 70% of the volume for Nvidia's next-generation Rubin platform. Here's how SK Hynix actually got here. 1983, founded as Hyundai Electronics Industries, part of the Hyundai Group's push into chips. 2001, renamed Hynix Semiconductor, cut loose from Hyundai's financial troubles. 2012, SK Group buys a majority stake for 3.4 trillion won, rescuing it from creditor control. 2013, SK Hynix builds the world's first HBM chip, a bet almost nobody else was making. 2020, announces a $9 billion deal for Intel's NAND business, which becomes Solidigm. 2025, completes that acquisition in full. June 2, 2026, Nvidia's CEO publicly asks SK Hynix to produce more. July 10th, raises $26.5 billion in the biggest foreign listing in Nasdaq history. July 29th, reports a record quarter, 79.3 trillion won in revenue, a 76% operating margin. And by August, market cap tops $800 billion, with a forward multiple under 6. So what does SK Hynix say comes next? HBM4 production keeps ramping through the second half of this year. CEO Kwak Noh-jung has told investors flatly that 2027 will be the worst memory supply shortage in the industry's history, and that demand could outstrip supply all the way past 2030. 16 high HBM4E stacks are already sampling, aimed at Nvidia's Rubin Ultra platform in 2027. Around 10 customers now have multi-year supply agreements locked in, with more in discussion. And capital spending keeps climbing, into the high 40 trillion won range this year alone, with management promising discipline even as the checks get bigger. The bet? That demand keeps outrunning supply long enough to justify spending at a pace this business has never spent at before. So what's SK Hynix's actual edge? It invented the category, the first HBM chip in 2013, and it's the only company that's shipped every generation since, from HBM1 through HBM4. The Nvidia relationship, it's the primary HBM supplier for Rubin, close enough to that business that Nvidia's own CEO is publicly asking for more. Full-stack memory, DRAM, NAND through Solidigm, and HBM all under one roof. not just one bet. And locked-in demand. Roughly 10 customers now under multi-year supply agreements, addressing structural growth instead of just riding the spot market. None of that guarantees the current supercycle lasts. It does mean SK Hynix is the company everyone else in memory is racing to catch, not the other way around. So how does SK Hynix stack up? Against Samsung, still the larger company overall, with a massive foundry and logic business SK Hynix doesn't have, but Samsung is still catching up in HBM, offering a turnkey approach to close the gap. Against Micron, the smaller pure-play memory rival that overtook Samsung into the number 2 HBM spot in 2026, real progress, but still a distant second to SK Hynix's share. And against the market itself, every major memory maker is sold out into 2027, which means the real competition isn't for customers right now. It's for who can actually ship enough HBM4 to keep Nvidia's Rubin platform running. CEO Kwak Noh-jung put it this way. In an interview the same week SK Hynix listed on the Nasdaq, quote, "We forecast that next year will be the worst year in the industry's history from the supply perspective." He said this the same week SK Hynix raised $26.5 billion from new shareholders. A warning about scarcity is also the best possible pitch to the people writing that check. None of this comes without risk. There's the reception itself. A record-breaking quarter still missed elevated expectations, and the stock dropped nearly 10% in a single day, a sign of just how much perfection is already priced in. There's share pressure. SK Hynix's own HBM market share has slipped from around 69% a year ago to somewhere near 60% now, as Samsung and Micron both close the gap. There's concentration. An outsized share of this boom traces back to one customer, Nvidia, and its Rubin roadmap. And there's the accounting itself. That headline 93.9 trillion won in net profit includes roughly 63 trillion won in one-time investment gains, not operating cash. The cleaner number is the 60.5 trillion won in operating profit. So why does any of this matter beyond one company's earnings call? Because SK Hynix's own numbers are the clearest evidence that the company that actually invented the category is the one no one else can easily catch. The bull case, a 76% operating margin, a forward multiple under 6, and a CEO warning that supply gets worse before it gets better, a warning that's also a promise of pricing power. The bear case, a quarter that broke every record on Earth and still fell short of Wall Street's number, a market share that's already sliding as rivals close in, and capital spending at a pace this company has never sustained before. If the memory cycle turns before HBM4's ramp finishes, an $800 billion company built on a supply shortage has to prove that shortage was real, not manufactured. So which is it? The company that invented HBM and just proved it with the biggest foreign listing in Wall Street history? Or a supply story that only works as long as the shortage does? Comment your take below.